I am so very proud of the growing trading team that we've built over the years, and we're really starting to see some truly amazing performances come out of our trading team. And I'd like to share some of the very same things that this amazing trading team is doing on a day-to-day basis to increase their performance in the markets. We've had a really very unique market this year, 2018, a market environment that has actually become even more perfect for many of the tactics and techniques that we use. So I've seen levels of profitability skyrocket amongst my traders because our concepts, our tactics, while they shine in all market environments, they shine the most in the market environment that we are experiencing right now. As many of you know, most professional traders make more money in a declining market, in a bear market, in a market that does not favor the long side. Most professionals make more money on the short side. They make more money betting on a market that has a tendency to decline. And the main reason for this is because that markets tend to fall faster and harder than they rise. And so profitability appears a lot bigger and a lot faster than they typically do during long markets. All right. Personally, I would prefer to short every single day of my life. In fact, I tend to be dragged to the long side through the process of elimination. When there is absolutely no short available for me, that's when I know it's a long morning, it's a buy market. But I am first the most alert for a short position. And we're going to cover some of the key short strategies that I use to really come out of the open in a very strong way on most mornings. All right. Now, if you are having a sound issue, that will tend to be your connection, your side. It is rarely my side. All right. Just want to let you know. If you lose your connection, you might have to, or the image, you might have to log off and log back on very quickly. All right. But most of the issues will tend to be on your side. I just want to let you know that. So if you're experiencing interruption in the audio, that's typically your connection. If you are losing the image, that's typically your connection. All right. All systems seem to be very strong, and we seem to be ready to go. All right. Now, I have comments on, but they are in privatized mode. So what that means is that my staff and me can see the comments. You can see your comments. You just can't see the comments of others. Okay. And I do this because it can become very distracting to see hundreds of traders typing questions simultaneously, and it takes your attention away from what I actually want to point it to. So when we have very, very large groups like this, I tend to keep the comments in what we call privatized mode. You can see yours, you can't see others, we can see everyone's. All right? So guys, without any further ado, I want to get started, but I first want to find out where some of you guys are from. All right, what cities are you from if you're from the United States? What countries are you from if you're not from the United States? Medellin, Brazil, San Antonio, Texas. Whoa, Canada, Colombia, Peru. It's going by so fast I can't read it. Sao Paulo, Maryland, Miami, Dallas, New York, wow, Tampa, Spain, India, Costa Rica, wow, incredible, Ecuador, Venezuela, I love it. I love it. Mexico City. Woo! Paraguay. I love it. Italy. Maracay, Venezuela. I love it. Beautiful, guys. Beautiful, beautiful. We have an international audience. And guys, I am going to do my very best to change your trading life from this point onward. I promise that if you take in the concepts that I'm going to share with you today, they're going to be somewhat basic but extraordinarily powerful. And I'm going to give you a small handful of things that starting tomorrow should actually start work. These are not things that you have to work on and eventually start getting after weeks or months. These things that I'm going to share with you should start working tomorrow in your own trading. And everything that I share with you today is applicable in every market in the world. I don't care if you trade stocks, options, bonds, futures, Bitcoin, pet rocks, Cabbage Patch dolls, cars, houses. If human beings traded back and forth for money, the concepts are applicable. These are universally valid. That's point number one. Point number two, everything I share with you is applicable in all time chart, a 4-hour chart. Every concept is universally applicable across all markets and across all time frames. All right? So I just want to let you know that. But very quickly, guys, for those of you who have no idea who I am, I have been a professional trader for 32 years. Starting December 5th of this year will mark my 32nd year as a professional. My 37th year in March of next year, I will make 37 years trading, but 32 of those years as a professional trader. All right? I am the author of 5 of the best-selling books on trading throughout the world. These books are written in 5 different languages and continue to dominate the trading industry. Okay? My 5 books have sold more copies and have had an effect on more traders than every single trading book ever written combined. I'm very proud of that. I've trained hundreds of thousands of traders worldwide over the past 25 years. I am the founder of a company called Pristine that went on to be one of the most dominant trading organizations in the world. Okay? And I currently train and fund more traders than any other organization on planet Earth at this particular time. This slide is outdated. We are approaching 9,000 traders worldwide that are either in some level of development in their trading, and a percentage of those traders are personally funded by me. And I'll talk a little bit about that today. I do want to make sure that you know, how to follow me. This is very important. I am also known for putting out more free trading content, valuable trading content than anyone else in the trading industry. And I utilize these networks here that you're looking at here as the main conduits, as the main way I share my live trading, my live training, and my educational talks on the subject of trading. Okay? I try my best to trade live in front of hundreds of traders every day on Periscope, and I have both an English channel and a Spanish channel. I'm also going to start trading live regularly each week on my YouTube channel, but my YouTube channel has literally months and months and months of free trading content that can really help raise your level of trading acumen and skill no matter what market you trade. All right. Instagram is the network that I am the most active on, and I strongly encourage that if you have any interest in trading whatsoever, and if you're here, I think you do, you definitely need to follow me on Instagram. It's where I am the most active throughout the entire day. All right. Okay. I'm actually going to skip some introductory things, guys. I think that if you're here, you understand very basic things like why trading is so special, how trading allows the highest level of freedom, the highest level of financial independence. I'm sure many of you realize that with just a laptop computer and an internet connection, you are in business from anywhere in the world. It is an activity that is not location specific. It is an activity that can be done part-time but yield full-time results. My average trading day is 18 minutes. My average trading day for me personally is 18 minutes. All right, it used to be a little bit less. It's become a couple of minutes longer over the last several months. All right. You don't need the traditional things that businesses require. This is a business. Trading is not an activity. It is a business. It is your business. You don't need employees. You don't need offices. You don't need certain types of furniture or equipment. You don't need inventory like a restaurant does. You don't need tables and chairs, and you don't. And for many people, you don't need special licenses. Some people do, but for a lot of people, you don't need special licenses to do this as a business. You don't need pens and pencils and paper clips. You don't need to travel. You don't need uniforms. You don't need the traditional things that most businesses require. And that's one of the most special things about this activity we call trading. That just with a laptop computer and internet connection, you can be in business. Now, what has traditionally held people back is the fact that they don't have the proper funding, and of course, they don't have the proper training. And that's why thousands of traders come to me, where they are trained and educated every single day of their lives, that they are under the guidance of top performing traders that are responsible for their day-to-day development. They each start off with a $50,000 account and learn how to maneuver at that level before moving to a $100,000 account and a $250,000 account and onward and upward. But every trader starts out at the $50,000 level. Every trader is assigned to a group, and that group is responsible for their development, their day-to-day development. And we believe here that training and education and guidance is something that does not have an end, that as long as you live and breathe on this planet, you are constantly learning. Your training is for life here. Your education is for life. Your guidance is for life. This is a for life program that we have thousands of traders involved in. All right. And but there are some negatives to trading as well, guys. Some very briefly, there's some negatives to trading. First, most people don't really initially understand that there's a high failure rate in trading. 92% of people who try to do this fail. Listen to me, 92% of the vast majority of people, 92% fail. I want this number to stick. I am not one of these individuals that go out and tell you that every single person can do this. Most people can't. I am not going to tell you that Everyone can become rich. Everyone can make money. No, most people will lose money. That this activity has a 92% failure rate. It is similar to the restaurant industry that has more of like a 98% failure rate. This is like trying to become an elite athlete, which has almost a 99.9% failure rate. It's a little bit better than those categories, but it's similar to all business categories where the vast majority of businesses, over 90% of all businesses, are out of business in less than 5 years. Over 90% of all businesses that open their doors are gone in less than 5 years. So trading is no different from any other business, but you must understand that it will probably become one of the most challenging things you ever take up in your entire life. That you must understand coming out of the blocks that 92 out of every 100 people are going to quit, are going to lose, are going to give up, are going to never make it. Now, when I heard this statistic, I said, where do I sign up? This made me more excited about trading because I don't want to do something that everyone else can do. If everyone can do this, it's not special. And if everyone can do this, there's no money in it. Show me something that's easy and that the vast majority of people can master, and I will show you something you can't get paid for. That you get paid for what has a high failure rate, that the payment is because the vast majority of people can't do it. That this activity called trading is lucrative because it has a 92% failure rate. This activity is profitable because it's hard. Every person who does not have an ailment can walk. Now, you can't hold a special banner up there and say, wow, I can walk. Can I get paid for walking? In most cases, the answer is going to be no. The vast majority of people in life on planet Earth who can walk, all right, the vast majority of people who don't have an ailment can walk. It's not considered something of value from a payment perspective because everyone can do it. Everyone can walk to the refrigerator and grab a bottle of water. You can't get paid for that. You cannot get paid for what's easy. You want this to be hard. You want this to be difficult. You want there to be a high failure rate. In addition to that, it's the 92% of the people that make deposits in the market that provide the capital that's necessary for the 8% to win. Remember, the market is made up of two different groups of people. Those who make deposits into the market and those who make withdrawals. Those who withdraw never deposit. I want you to understand this. I have not made a deposit into a trading account since 1992. I only withdraw. Now, where do you think that capital comes from? Where are the withdrawals coming from? Where are my almost daily profits coming from? If it's not coming from my pocket, it's coming from other traders' pockets. You want there to be failure. You want there to be a high failure rate. You want there to be traders who never get it. You want there to be people who think this is easy and dump their money into the market, never to be seen again. That's what makes this activity profitable. Tell me you understand what I'm saying, just a few of you. I need your responses sometimes just to make sure that I'm still connected with you. Does that make sense? So I want you to be proud of the fact that this activity has a 92% failure rate, but do not believe for a moment that it's any different from any other business. How many restaurants have you seen open up one day only to close another the next year? How many discotheques? How many clothing stores? Grand opening, grand closing. This is a business, and it's no different from any other business. And here's the stupid thing amongst people that have no concept of real trading. Here's a stupid assumption. Sometimes your family is your worst enemy when it comes to you getting involved in trading. They think it's a casino. They think it's gambling. They think it's stupid. They think you're wasting your time. They think you're just simply going to lose. They think no one can be successful at this. That is terribly, terribly wrong, but not absolutely wrong. They're right in the sense that the vast majority of people are going to fit that bill, that the vast majority of people can't make it, and that is true. But they would actually feel more excited about you going into the restaurant business. Mom, Dad, I'm opening up my own restaurant. Oh my God, the pride. But yet that industry is probably statistically one of the stupidest industries to enter into, because 98% of all restaurants throughout the world are gone in less than 3 years. They don't survive. Restaurant industry has a higher failure rate than the trading industry. But yet, people would be prouder of that. They would support that high failure rate activity and not support your trading. And that's just a lack of understanding. All right. I think I beat that horse. Guys, before I delve into tactics, which I want to share with you, I want to show you the path that every single one of my traders in my program goes through. That the first thing they do, they take in all of my trading concepts. They learn each trading tactic, each trading technique. They learn how to control their risk, how to manage a trade for maximum profitability. They learn profit-taking techniques, when to take half the profits off the table, when to exit everything and take it all. They learn how to keep their losses small, and they learn how to maximize their gains. They learn how to rank each trade into whether it should be a medium-sized trade taken, or whether they should play this trade lightly, or is this one of the trades that you trade more aggressively? They learn all of these things. They learn the specific indicators to use. They learn which moving averages to rely on. They learn concepts of support and resistance. They learn one of the most important things, which is when not to trade. Most people are focused on trading, but the master needs to know when not to trade. All of these things they learn. And once they've learned them, what their job is to do is to demonstrate their ability to take a look at this, guys. Their job is to, let me get my epic pen up here. Their job is to take their understanding of these concepts and to show me, to demonstrate that they can take, I'm going to change the color here, that they can take a $50,000 account, all right, and make $3,000. Now listen to me carefully. They've got to take the trading concepts and techniques and tactics that are being taught, all right, and their training level involves demonstrating their ability to take a $50,000 trading account and make $3,000. Now, listen to me carefully. Making $3,000 with $50,000 is not the difficult thing. In fact, making $3,000 with $50,000 is relatively easy. I have traders that have made $5,000 in one single day with a $50,000 account. We had a trader today that made $3,800 with a $50,000 account. One day, one morning. The 3,000 with the 50 is not the challenging part. Where the challenge comes in is making it responsibly. And let me explain to you what they must do. They not only must make the $3,000, all right, but they have to make it without losing more than $300 on any given day. Uh-oh. Sí, hay traducción en la otra salón. Guys, help the people out here. Keep constantly putting the link for the Spanish room in this room, please. Constantly do it. All right? I need you doing it every few moments. All right? Okay. So, guys, they have to make $3,000. Now, it doesn't, but without losing $300 on any given day. And what's more, they have to make the $3,000 without also losing more than $600 on any given week. You see, a master trader is not judged by the profit they make. They're judged by their drawdowns. Listen to me carefully. Frankie, don't worry about it. The words are just listen to my talking, all right? I know the words on the slides are in Spanish, but it's my talking that matters the most, all right? So this is the maximum loss per day column. This is the maximum loss per week column. This is the maximum number of shares that you can have. I don't know why there's a dollar sign there. All right. The maximum number of shares, 500 shares. So they can take plays with 100 shares, 300 shares, maximum 500 shares in any given position. So understand that master traders, responsible traders, professional traders are not judged by the 3,000. They're not judged by their level of profitability. They're judged by their average drawdown, their average negative day, their average negative trade. It's this part that makes you a professional. You see, the winners come all by themselves, but small losses can't come all by themselves. Winning trades can come without skill. Winning trades can happen by luck, but small controllable losses are never the result of luck. Small controllable drawdowns are the hallmark of a professional. Small controllable drawdowns are the sign, one of the key signs of mastery. So we look more at this. How does the trader make this $3,000? Do they make it like an idiot? Do they make it like some wild person in a casino playing slot machines like a crazy cowboy? Or do they make it responsibly? Do they make it in a way that proves that they protect the money? That more important than making the money is protecting the money? Do their trades show that they are a protector of my money? Do their trades show that they are not crazy and wild and unpredictable? Do their trades show that they are responsible and careful, aggressive when need to be, but never aggressive to the point of being wild, uncontrollable? And it is these two columns that make achieving the $3,000 a lot more challenging. Now, I want you to know, traders, I want you to know that if a trader of mine's account goes negative by $301, they have 6 seconds. They have 6 seconds to do the right thing. They have six seconds to liquidate their positions. They have 6 seconds to end the trading. They have 6 seconds to do their most important job, which is to protect the money. I consider a loss on any given day with $50,000 of $3,000, $300 or less controllable. Anything beyond that is not controllable. So once they go $1 beyond what is controllable in my world, they have 6 seconds. If they fail to do what they're supposed to do in 6 seconds, in an instant, their account gets auto-liquidated and their keyboard shuts down. That's right. Algorithms come to the rescue and auto-liquidate the positions without any human intervention, and their keyboard stops working until the next day. If the trader reaches the maximum $601 for any given week, they also have the same 6 seconds. If they fail to do what they're supposed to do, the algorithms, the robots, my system auto-liquidates every position and eliminates the activity that can happen from a trading perspective on their keyboards. I believe I'm generous, but I'm not stupid. But here's the thing. Do you guys see my markings? Do you see me circling on the chart here? I just want to make sure that my markings are showing up. You do see them, okay. So understand this, that guys, once a trader shows me they have to have a minimum of 200 trades. They have to have 90 days or more of trading under their belt. So not 200 trades in one day, but you've got to show me 90 days of trading. You've got to show me a minimum of 200 trades. And if you have achieved this minimum of $3,000, I had a trader this week who graduated with a $15,000 gain. All right, so by the time he reached his 90 days, he had $15,000 in profits, okay? And he did it very responsibly. Very few times maxing out on any given day of $300 and never maxing out for the week. That's responsible trading. Once that occurs, this account gets turned on live. You see, at the first level, it's not live. At the first level, everything is real. Everything is identical to what you'd experience live. The data, the trade, the activity in the market, everything. It's just that the algorithms stop the orders right at the last second from actually going all the way through. And once you have demonstrated your proficiency to protect the money while gaining, your account turns live. And then you and I are in business together. I fund you with a real $50,000, and you have to demonstrate your ability to do the same thing. Now do it for real. Do it live. Make your $3,000. Same parameters. Maximum drawdown on any given day, 300. Maximum drawdown on any given week, 600. Okay? And I will give you will get 40% of the gains. And the very best part is that I get 60% of the gains. But you will never have to ever put a single dime of your own capital at risk. You will never have to have your family run the risk of loss. If you lose my capital. If you lose, I'm the loser. All right? If you quit at some time in the future with a negative account, You have no obligation to pay that back. In fact, I consider that if you have not achieved success at this, it's my fault. So I want you to understand that I get the majority, I get 60% of the gains, but you put zero investment into it. Now, once you have achieved 3,000 here, your account moves up to $100,000. With $100,000, the goal changes. Now you must make 6,000. And your drawdown on any given day goes to 500, on any given week goes to 1,000. And as you're achieving this 6,000, you're receiving 40% of all the gains. Achieve this level and your account goes to 250,000 and your goal becomes 10,000. Then 500,000 and your goal becomes 20,000. And the scale continues, guys. I just show you the first 4 levels, but it does continue. It continues into the millions of dollars. And so I want you to, as we cover the tactics and techniques that I'd like you to use to get through all 4 of these levels, I want you to understand that this is a business, that what I am trying to do is put passionate people in the trading business with me. That this is your business and we share the profitability. That your responsibility is just to learn well, to maintain your passion and to trade. But you trade any time you want. You trade any time of day you want. You trade any day of the week you want. It's your business. There's no schedule. There's no location you have to show up to. I have traders, some traders trade 1 day a week because that's when they can. I have some traders that trade only the first 30 minutes of the trading day. I have some traders that trade only the last hour of the trading day because that's when they can. I have some traders that trade all day long, every minute of the day. It's up to them. It's up to you. This is your business. But these are the guidelines. And your goal is to get to this level, level 4. At level 4, some truly serious money can be made. You can make money at $50,000. Oh, yes. You can make some good money at 50,000. But I'm talking serious money. The kind that can make certain people's jaw drop. You want level 4. Your goal is not to stay satisfied at level 1. Your goal is to get to level 4. All right? How many people right now think they could become dedicated enough to get to level 4? How many people think that right now? You think you can? Guys, this is what traders need: structure, guidance, a plan, goals, parameters. But most people are out there trading like a bunch of freaking idiots. There's no guidance, there's no parameters, there's no goals, there's no rules. They're just out in the middle of sea without any destination, floating around, waking up every morning, hoping today is different from yesterday. But with this structure, with this guide, with these goals, with these parameters in place, you develop properly. Yes, you're going to make a mistake and hit that $300 sometimes, but that's going to hurt and you're going to correct it. It's going to sting, so you won't want to do it again. You might get shut down for an entire week on a Tuesday or a Wednesday because you were a little too eager, a little too irresponsible. And I'm telling you, waiting those 3 days of not trading is going to really make you the next week do your absolute best to not repeat that again. You see, this is what traders need, a responsible, methodical way to develop, not open up an account and just start trading wildly from any point here, there, up, down, sideways. That brings about nothing. All right, guys, let's get into how I want you to work on graduating this $50,000, earning that minimum $3,000 to start your business. This is all that it takes. Earn this $3,000 and we start our business, and you never need your own capital. So here's how I'd like you to try to do that, okay? So let's start going over some of the concepts. I want you to understand that the market, every market in the world has a language, and the language of markets are in the form of bars, all right? In Spanish, they're called velas, right? Bars, velas, candles, right? Velas, barras, velas. But every market in the world's language is made up of 14 bars or 14 letters. Letters being equivalent to bars. There's only 14 bars every market in the world repeats over and over and over again. 14. It speaks its language with 14 letters, 14 bars. And what you're looking at here are of the 14, these two bar types are the most important. That you can literally throw out 12 bars. You can focus on 2 of the 14 bars that the market repeats over and over and over again. And you can focus on these 2. What are these 2 called? Elephants. Those who don't speak Spanish should be able to figure out that word. Elefantes. Elephant bars. And what I call tail bars. Elephants and tails. And one quick way to say it, elephants have tails. Elephant bars and tail bars. All right? There's a green version, or what some might call a bull version of an elephant, and there is a red version, a bear version. With your tails, there's the bull version, the tails are at the bottom of the color, and on the right side, we have the negative version or the bear version where the tails are on the top of the color. So we call these topping tail bars, and these are bottoming tail bars. Now, the left side are generally they are bull. This is the bull side. These bars suggest, in the vast majority of cases, higher prices to come. So a solid, fat, green elephant bar should lead to more green. You see? And a fat, solid, red elephant bar should lead to additional red or additional downward movement, additional momentum to the downside. Bottoming tail bars, in most cases, should lead to higher prices. And yes, even if the body of your bottoming tail bar is red, if the tail is at the bottom, A high percentage of the time, there's more upside to come. So on the left, you have more upside to come, and on the right, in most cases, you have more downside to come. All right? Now, let's talk percentages. What percentage of the time after an elephant bar do you get more momentum to the upside? 88% of the time. That's the number we're talking about here. 88% of the time, a bar like this will lead to higher prices. 88% of the time, a bear elephant bar will lead to lower prices. Now, (82% of the time, bottoming tail bars will lead to higher prices. Topping tail bars will lead to lower prices. It's a little bit less, but still extraordinarily high. Why is an elephant bar so powerful? Because you and I can't produce it. It takes billions of dollars to produce an elephant bar. So when you see a powerful, fat, green bar form in a short period of time, you know that it's institutional money piling in. When you see a bottoming tail bar, which means that the stock rallied to the upside, that this move up was so powerful, so violent, that it's not normal. It's institutional footprints. It's big money commitment. And that's what we're hunters of. We hunt big money flow. We're not hunting the money flow of our neighbors or our friends or our relatives. We're hunting the money flow of big, large, multi-billion dollar institutions, the pension funds, the hedge funds, the mutual funds, the large money management funds, the countries that are out there trading the markets as well, the large banks that are trading the markets as well. It's that money flow. And when they put their foot into the bathtub, the water level rises. When you put your foot into the bathtub, the water level barely ripples. So your money going in can't produce an elephant bar. Your neighbor's money going in to Microsoft can't produce an elephant bar. Your relatives' money going in to Microsoft can't produce an elephant bar in Microsoft. I don't know how many times I have to say this, but I need the Spanish link repeated every 5 minutes. All right, can my team accomplish that, please? All right. So we've got 88% of the time, if a green elephant bar forms, 88% of the time, it's gonna produce more green. 88% of the time, the red will produce more red. 82% of the time, bottoming tails will produce higher prices. Topping tails will produce lower prices. All right. Now, let me see I can still, give me a second here, guys. Give me a second here. All right. Let's try something here, if I can, very quickly. Let me try something here. Do something a little unorthodox today here. I'm going to, boom, take that off, and I'm just going to do the whole monitor. I'm going to connect with the whole monitor. Let's hope that didn't, yes, boom. All right, I'm going to move you guys to the side here. This is my trading platform, guys. It's a platform called Fusion. Okay, all of my traders trade on this platform. It's an institutional, professional platform. It is not available to the retail or regular public. It is specially designed for professionals. Okay, Danielle, thank you. Okay. Now, find on this chart, traders. This is a chart of Apple. It's 2-minute chart of Apple. Each bar represents 2 minutes of trading. Okay? Every bar represents 2 minutes of trading. And you see a collection of green ones and red ones. I want you to find the first fat green bar on the chart. Have you identified it? The first one, starting from the left side of the chart. Have you found the first fat green bar? Boom! Beautiful. Higher prices after that 88% of the time. The question is not the question, but you know, some follow through is going to be bigger than other follow throughs. All right. Now find the first really fat red bar. Boom! Woo! Find another fat red bar. Boom! Find another. Boom! Find another. Boom! Find another. Boom! Crazy. Boom! Boom! Now, but check this out. Check this out. Let's take a look at these fat red bars, these fat elephant bars. Let's take a look at them, right? I'm going to circle them, then I'm going to remove the circles, just so you know the ones I want you focused on, okay? Yes, and yes, and yes, okay. So these fat, solid reds, it's not just that they're elephant reds, they're elephant red bars, they're red elephant bars, boom. It's that I want you to find the fat red ones that eliminate green ones. Oh yes, this is the powerful. This is the power. It's not just a fat elephant. It's a fat elephant that eliminates green. So if we take a look at this fat elephant bar, it has painted over this green, look, this one. Look at all the green that it has painted over. It's like the elephant bar is painting over. Look at all the work that it is undoing of the opposite side. It's searing through the former opposite color. You see? So it's not just elephant. I want you isolating elephants that eliminate their opposing color. Check, and you judge that by, see this pocket of green? Where does a fat red bar just eliminate it? Boom! It's eliminating this green. It's undoing the work of the opposite side, the opposite color. This is a struggle. This is a fight. This is a war against red and green, against bulls and bears, against buyers and sellers. We want to identify the side that's winning. And the way you identify the side as winning is which color is producing fatter bars, and which color is not just producing fatter bars, but fatter bars that are eliminating the opposite color. Who's doing that more? Who's doing that more frequently? Look at the size of green. Look at the size of your green bars. And then look at the size of your red in comparison. Which bars are taller, longer, bigger, fatter? And then which color seems to more frequently violently remove the opposite color? It's clearly red in this case. Red is searing through the opposite color. Red, it's eliminating the opposite color. Every movement eliminates the opposite color. Red here, eliminating the opposite color. Red, eliminating the opposite color. Tell me you understand this. Fat color, fat red, eliminating green, or fat green, eliminating red. Tell me you understand this concept. You got it? So listen, when we get fat red eliminating green, you dive into the fat red. You dive, you take 25,000, you've got 50,000, you take 25,000 and you dive in to the red that is wiping out green. We take half of the account. You understand? If you were doing it here, boom, you're diving in, boom. This red is eliminating the green. All right, here's the green, boom. This red is eliminating the green, boom. There are many to catch here. All right? So our first entry is usually half the account. You take 25,000 and that's your first entry. All right? Diana, everyone else can see something. So what you're gonna have to do is maybe log out or refresh and it'll come back for you. All is perfect. Okay, I just want to let you know. All right. All right, well, log out and log back in. And are you looking in the right place too? Are you looking at the right screen? All right. All right, guys, notice how your elephant bar here, right, wiped out red. You see? You see the green elephant wiped out the opposite color. All right. So you have to log, guys, if you don't see anything, log out and log back in. I promise you it's going to work. Don't sit here and just watch a blank screen. Log out, log back in, and you're going to see the screen. All right? It's on your side. Okay. Someone's asking a good question. Someone says, well, Oliver, what if I get like a solid green like this, right? And it doesn't have follow through, and I get a solid red like that. You always give the benefit of the doubt to the most recent bar. Like, look at this one. The most recent bar, red, boom! That's the one that started everything. You see? Now, here's another thing I want to teach you. Here. The market rarely eliminates a big bar, but when it does, something's changing. So I'm going to repeat that. You see this big fat bar here? The market will rarely be able to reverse that. Rarely. Not impossible, but rare. All right? So where do you think your protection goes? Your protection goes above the big bars. Above the fat ones, not the little ones, the fat ones. Notice how the fat ones, the green doesn't come up to take out the fat. The green doesn't come up to eliminate the fat bar. The green doesn't come up to eliminate the high of the fat bar. The green doesn't come up to eliminate the high of the fat bar. Tell me you understand this, that fat bars protect the trend. So this is where your protection can be. Do you understand? Your protection can be above the fat bar on a short or below the fat bar on a green, on a long. So my traders, let's say my traders would dive into this fat red bar. They would put their protective stop above the fat bar. And check this out. Every fat major bar would be a stop adjustment. Stop adjustment. Stop adjustment. The top stop adjustment. Stop adjustment. Stop adjustment. And they will walk themselves all the way down for maximum profitability. Guys, if you can't see the image, log out and log back in. It's on your end, I promise you. All right? All right, we can take anything here, guys. We can take, let's take Baba. Look at your fat red bar, boom, that wipes out the opposite color. Boom, wiping out this green, that green, that green. They dive into the fatness, protective stop. Okay? So they're in the fatness, their protective stop is above the fat bar. Where do they adjust their next protection? You tell me now. Can you see it? Can you see it? Not above the next high, no. It's not above the high of every bar. It's the fat ones. What's the next fat bar? What's the next elephant bar? Right here. Boom. Their protection gets moved down here. You see? What's the next fat one? Down here. Boom. You see that? The rest is noise. This is noise. You see? This is noise. All this is noise. It's fatness that's key. Just a few of you let me know you understand that. Does that make sense? You want to take another one? We can take another one here. Let's take, you can take something like, I want to take something that was trending quite nicely. Let's take Facebook. That's been in the news quite a bit. Facebook's been in the news. So look at where you start to get fatness. You're starting to get fatness on the red side. Fat. When you start to get fatness that rips through the opposite color, searing through it like a hot knife in butter, boom, protection, the next one, protection, the next one, protection. Now, let me add one more thing, okay? You know how to identify fat that's searing through the opposite color, fat elephant searing through the opposite color. You know that big bars are typically protected, so you can walk a stock down or up based on big fat bars, okay? But we take profits on swings away from this line, the 20-period moving average. So look at the 20-period moving average here, guys. Look at the 20-period moving average is this blue line. I should make it a different color. It's the blue line. So I want you to notice that when a stock swings away from the blue line, it's primed to snap back. You see? Away, snap back. Away, snap back. You see that? A stock can only get so far away before it snaps back. Away, snaps back. Away, snaps back. So where do you think you take profits? Away. Nothing? All right, let me try this again. Let's do this. Now, how's that? Do you see the image? All right. Okay. Now, if it's too large, guys, there is a box. There's a box in the upper part of the screen that calls small review, small preview, okay? You got it? Okay, there's a box you can check in the upper part of the screen that says small preview if it's too big. All right. So check this out, guys. So here you have the 20-period moving average. This is a moving average that just averages the last 20 closing prices. All right. Now, notice how you swing away and then come back. All right, now it's on the downside. You swing away and then snap back. You swing away, you create space and snap back. Space, away, and you snap back. So it's the movement away that's time to take profits off the table. You don't want to take profits near the 20-period moving average. You want to take profits away. So if you were long, you want to take profits away. See, you're away. If you are, let's say you take this play, fat red bar, boom, put your protection above the fat bar. But you get away, take some off. Then, boom, you can go back in on another fat red bar near, move your protection to above the next fat bar, away, you can take some off the table if you like, or certainly away down here, away from the blue line. Snap back, boom, you can go back into the next fat one, and you can start playing this like a true professional, where movements away from the 20, you take profits. Anything you leave in, you protect big bar by big bar by big bar, big bar by big bar by big bar by, just step on top of the big bars, big bar, but away you're taking off. Away you're taking off. Protection, protection, away, take off. Protection, take off. Protection, take off. Protection, take off. Tell me you understand this concept of taking profits away from the blue line. You got it? Now, if you want me to go back to Baba because, was it Baba? It was Baba. And I don't know why. It's showing my last print now. I don't like it. So on the Baba, boom, fat red bar, protection. Where's your next protection? Above the high of the next fat red bar. Where's the next fat one? Here. Boom. And you can walk your trade down for maximum profitability. Fat bar by fat bar by fat bar, ignoring the noise, but also taking profits off the table. Let me see if I can eliminate this one here. I don't want this one on here. When you get away from the blue line, the moving average, take profits. Away from the blue line, take profits. You see, stocks can get away from the 20. They can't stay away from the 20-period moving average. And you will see this phenomena on anything that is traded, anything that moves. You understand? Stocks can get away, they can't stay away. Why I can't. Let's do this. Microsoft opens away and comes back to the 20. Look at that. Then it gets away. See the space? And comes back. Sometimes it crosses it. It gets away, but comes back. So you must lighten up your positions. All right? If you're going buying here, protection there, you must take profits away. If you're, see this green bar, fat green bar, boom. What is it doing? It's wiping out red. Fat green is wiping out red. Boom, you get away from the blue line. You've got to eliminate at least a portion of your position. See, you can get away, you can't stay away. You can get away, you can't stay away. You can get away, you can't stay away. Tell me you understand what I'm talking about here. Bill says, I always learn something new when I get on. Awesome. Does this make sense? Guys, do you know that you can big bar your way to maximum profitability? This is one concept using fat bars that go through the opposite color. And with this one concept, you know where to protect yourself using the big bar, where to adjust your next protection to. You know once you get away, you lighten up or eliminate the trade. You know that you can dive in to fat bars, boom, that sear through the opposite color. Protection. All right? And you're coming back to moving average support. My traders would know to take the trade off the table there. Fat bars are your first step to master. You understand? So let's go over specifics. I'm going to take this chart away for a little bit here. Let me see. We were looking at Apple. Let's just do this one last one again, Apple, guys. All right, let me know that you see Apple here. You see Apple here. This is the chart of Apple, right? You got it? You see it, right? Okay. Now, I want you to notice something. When the stock moves up and then gives you the other bar, the tail bar. I'm going to do it again. Up and then the tail. You see? The topping tail. Up and then more than one tail. 82% of the time, lower, lower. So look, up and then the tail. Up and then 1, 2, 3, 4 tails. Then boom, big bar, searing through the opposite color, protection. Look at the opposite color, green. big bar searing through it. Boom. Opposite color, big bar, boom. Opposite color, big bar, boom. Do you see all of those moments? Do you see the moments of big bar, big bar, big bar, big bar? Now walk yourself down. Here's topping tail, topping tails, big bar, next 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 big bar, but away take profits, away take profits, away take profits. So you have to put it all together. Away, look at how you started off near the blue line and you move away. Then you get a little closer and then you move away. Then you get a little closer. Then you move away. So if you combine protecting yourself big bar by big bar, taking off away, and potentially just going back in, hitting it every time you get away, right? Away, and then you get green again. Green, now does a fat red movement eliminate the green? Boom. See, you get green again, and does a fat red bar eliminate the green? Boom. Boom. And this is just repeated over and over. All right? NVIDIA today starts off with, this is the first fat green bar of the morning. It's a fat elephant bar. 88% of the time, you're gonna get more green to follow. Boom. There are two ways to enter. Some traders will enter into the violent 2-minute bar, but toward the end of it. So if this is a 2-minute bar, it's an anticipatory entry. They would enter in the last, with maybe another 20 seconds left in the bar, maybe another 30 seconds left in the bar, not too early, but before the bar finishes. So some traders on a bar like this are, some of my traders are entering toward the end of that bar's formation. Some are waiting for the next bar to clear the high. Remember, big bars protect you, so their protection is under the big bar. And then they begin tracking big bar by big bar. Now, the next big bar, then these are two little ones, then the next big bar. And then look at how we come right to the 200 and it ends at least temporarily. You want to try it again? Boom. Big bar, protection under the big bar. Where's your next protection adjustment? Under the big bar. You understand? You can walk your trade big bar by big bar all the way to maximum profitability. It's the big bars that help you eliminate the noise and not get confused by the noise. There's a lot of noise in the market. 88% of the time, there's follow through after big bars. 88% of the time. Do you know what you can do with an 88% accuracy rate? It's crazy. Tell me you understand this. Are you picking up what I'm laying down? I love it. Now, I have to add one more thing for you. If you track the trade big bar by big bar, and you take profits away, take profits away, take profits, right? Remember? You can get away, you can't stay away, all right? When you're doing it under, when you get away from your entry price, but once you have the 20 working with you, then it's away from the 20. You see, it's different. When the 20 is above you here, your buy, your stop. Now, when you get away from your entry, you got to think about taking profits. But when you have the 20 underneath you, it's away from the 20. You see? Away from the 20. Once you get space, away. Boom, 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 boom. And then protect. Anything you keep, you must protect. Big bar by big bar. Protection. Where's your next big bar? Protection. Where's your next big bar? Protection. Where's your next big bar? Protection. Away, away. Okay, you see how you're way up here, but there's no additional big bar. And you're like, but my protection is too far away. I want to take profits here, but I don't want to take everything, but I don't want to lose all of this either. So let me add one more thing. The opposite color protection. So there's big bar protection, and then there's the opposite color protection. How does the opposite color protection work? It's easy. Whenever you get the opposite color, red, when you get 2 green bars after the color red, you can use the color red as your protection. So if you've got 2 little ones side by side, look at them as one red. So look, you have to surpass the red by 2 green. 1 green, 2 green. Okay, now your protection can go under the red. Now, look at this red. You see the red here? Boom. You got 1 green, 2 green that follows red. Now you can move your protection under this red. See? So you see this, you see the color red here? Once you pass it with green, 1, 2, you can now move your stop under that red. You see the red here? 1, 2, you can now, it's almost the same, but red. So you can now add to your big bar stop adjustment. You can use color and big bars. So here's big bar, color, big bar, color, big bar, color, color. You see that? Big bar. Or once you surpass red, 2 greens after, you can use the color. So when you combine the big bar method of moving your protection to, when you add to that the color way of moving your protection, you stay tighter and closer in a responsible manner. And listen, guys, learning to walk your play for maximum profitability is what a novice will never be able to do. This art right here that I'm teaching you is the crowning jewel of mastery in trading. Maximizing your trades. You see, the novice's problem is not winning trades. Everybody gets their share of winners. It's impossible not to. Stock's going to go up or down. You got a 50-50 chance every trade. But what do you do with your winning trades? What do you do? Do you cut them short? Do you take the profit right away and miss so much of what it has to offer? You understand? So learning to maximize, to ride your play out is very, very important in the game of trading. And the vast majority don't know how to do it. And now you do. Big bar by big bar. Opposite color by opposite color. That's how you walk your play. Big bar by big bar. Once you get the opposite color taken away twice, 2 bars, 2 green bars after red, you can now move your stop under the red. Then whichever one comes next, here's a big bar. Now you get the opposite color, 1 green, 2 greens, move it under the opposite color. Red, followed by 2 greens, move it under the opposite color. Under the opposite color. Meanwhile, taking profits away. So you're walking your stock underneath protecting it underneath while taking profits above. One more time, let me know you understand that. You're walking underneath while taking profits above on movements away. A 2-minute chart, but that's what I'm looking at. I'm looking at a 2-minute chart. Oh, guys, and I believe my charts have stopped. Oh, here we are. This is NVIDIA. This is the last part of the day. This is the other part of the, well, this is NVIDIA right here. 2-minute today. Make sure you're on your 2-minute time frame. All right. All right. Now, guys, let me go back to the slides here. Let me get the slides back on, okay? Because we have some additional things to cover. You noticed on my charts, let me get the slides up here, give me a second. You noticed on my charts I had 2 moving averages, the 20-period moving average and the 200-period moving average. Now I want you to, I want you to know that when your 20-period moving average is rising, okay? When the 20, the blue line is rising, and it's rising above the 20-period moving average, that's the picture of power. That's what I call the picture of power, all right? The picture of power. The 20 is rising, and it's rising above the 200, and your stock is rising above both. That's the picture of power. I'm going to repeat that again. Your stock is rising above the 20, and your 20 is rising above the 200. It's sort of like 3 fingers spread apart, like that. That's the picture power. Now you have the picture power to the upside and the picture power to the downside, just reverse. The reverse is when you have the 20 is declining below and your stock is below both. So you can have the picture power to the downside and the picture power to the upside. So let's look at some examples of what I want to show you here with this concept here. Notice you have the picture of power on this chart. Right? Notice that the blue line is rising above the red line, and the stock is rising above both, giving you the picture of what I call bull power or buy power. Now, notice when they are close together, all three. Notice when the blue 20, right? Notice when the blue 20 and the 200 and the price are kind of clustered together. Now I want you to notice when they are apart from each other. So we go from close to wide. And then the market goes back to close and then wide again. So the market's movements are always moving from contraction to expansion to contraction again to expansion to contraction again to expansion, and that's all it knows how to do, is contract and expand. Now, when do you think offers the very best opportunities for a beautiful explosion? From a contracted state or an expanded state? You tell me. When are your best opportunities? From a contracted state. You're going to tend to get the most explosive movements. So here's the thing. I want you to know that when your stock is still relatively contracted, you can still dive in. But when your stock is gone too extracted, it's too late to be diving in. Do you know that most novices have no idea of knowing when it's time to not do it anymore? Do not buy anymore, please. You can buy down here. You can buy over here. You can buy over here. It's not too far apart from each other, but here the space is too wide. Stop. Stop the game. No more commitments. No more going in. But Oliver, you said we can buy on the big bar. Yes, but not when you get big bars from wide spread wide apart. When your items, your stock, your 20, your 200 are spread too far apart, it's time to now ignore the signals and to start thinking about maybe going the opposite way. Let me show you another example of the picture of power. Notice everything is relatively close here. You're in a contracted state. So now find your big bars. Find your big bars wiping out the opposite color. Boom! Okay? Find the fat bars. Boom. Now, I'm going to share something else with you. What's the difference between this fat solid green bar here and this fat solid green bar? Can you see a difference? Or this one? What's the difference? This one here is very different from the other two. That's right, James. That's right. It's this fat green bar is happening near the blue line, near the 20. That's the ones we love. This one is even happening near, but this one is happening away. You should be selling on this one. Remember, away, take profits. Away, take profits. Now we come back. Now buy this one. Away, take profits. And we come back, you see? Away, take profits, because you're going to come back. Take the big bars near the blue line, the 20-period moving average. Do not take the big bars away from the 20. Do you understand this? Guys, and your responses do help me, make me know that I'm not disconnected. Is this understood? Now, if your blue line is rising, you should focus on fat greens and ignore the fat reds. If your blue line is rising, only pay attention to the fat greens that happen near the 20. You see? But let me show you something here. Your blue line is declining. You focus on the fat reds. Boom. This is the opposite color. This move can be so fluid because you have come from a contracted state. We're contracted, now we're expanded away. You better be taking profits on this away from the blue line. Take profits, take profits. You're too far away. Trade the big bars. Trade the big bars in the direction of the 20-period moving average. Mabel, when I say take profits, your question is, do you sell? If you're long, you sell. If you're short, you cover. Yes, when I say take profits, you're I don't know how else to say it. You're closing at least a part of your position. All right. Fat red, boom, protection, protection, protection. Away from the blue line, you better be taking profits. Once your 20 starts rising, do you see the rise? No more focusing on red. I'm going to say this again. When your 20-period moving average starts rising, no more focusing on the color red. You focus on the color green now. Look, green, boom, green, boom, green, boom. Take profits away from the blue line. Away from the blue line. So many people make this game so much harder than it needs to be. Yeah, these are 2-minute charts right here. These are 2-minute charts. When the 20 is declining, focus on red. When the 20 starts rising, focus on the color green. Boom! Boom! Look at the green eliminating all the red before it. Wow. Even if it's far from the 200. I think Michael, what Michael is asking is, even if the 20-period moving average is under the 200, but it's rising, do I focus on the long side? Yes. One of the biggest problems is fighting the blue line, fighting the 20-period moving average. If I can stop you from fighting the direction of the 20-period moving average, I can move you to profitability in weeks instead of years. If I can get you to stop fighting the direction of the 20-period moving average. Look, it's okay. Boom, fat red bar. Fat red bar, away, you better be taking some profits. But look at how that 20 starts to change. Now, no more focus on red. Boom, green. Boom, fat green. You see? Boom, fat green. Trade with the 20-period moving average. I'm going to say it again. Trade with the 20-period moving average. Do not trade against it. Tom says it sounds too easy, and I get that. I understand it. But let's think about it. Is the market really difficult, or do you bring the difficulty? Is the market complex, or do you bring the complexity? You bring the complexity. You know what the market does? It does 3 things. Do you know what it does? It does 3 things over and over again. What are those 3 things? What are they? It only has 3 possibilities. What are the 3 possibilities? Up, down, sideways. That's difficult? That's complex? That sounds pretty primitive to me. You know what's complex? The human body. Billions, if not trillions of processes going off every minute of your life, every second of your life. That's a complex mechanism. The market goes up, down, sideways, that's it. The complexity is not in the market. The complexity is in you. You bring it to the market. You know what this game is about? Red bars and green bars. 2 color bars, red bars and green bars. 2 lines, 20-period moving average, 200-period moving average. 2 locations, above the moving averages or below, So here we are below the moving averages, but now we are above the moving averages. So 2 bars, red bars and green bars. 2 types of bars, elephants and tails. 2 moving averages, 20 and 200. 2 locations above and below. Dude, if you're 6 years old, you should be able to follow that. If you're 8 years old, you should be able to do this. So let's just sing it together. Red bars and green bars, boys and girls. Above the 2 moving averages or below. Red bars and green bars above the 2 moving averages and below. Yay! Yay! So why, if it seems this simple, why can't more than 92% of the people do this? Well, first of all, most of the people have absolutely no training. Most of the people have no guidance. Most of the people are just winging it, and that will never bring success. If you think that you're going to come into my world, pit yourself against some of the brightest minds, trained minds, sharks, you think that you're going to pit yourself against me, against traders like me, without any training, without any education, just because you've opened up a TD Ameritrade account, you're going to take my money? I promise you it's not going to happen. I promise you that you will leave empty-handed almost every single time. To think that you can pit yourself against me with no experience, no real training, no real method, no real guidance, nothing systematic. And just because you have decided now that you want to start trading, that you're going to come into my world after I've been doing this for almost 32 years, and you're going to take money off my table, you're going to take my money, it's not going to happen. So the big part of the 92% is that people are just uneducated and untrained. They will take a golf lesson, but won't take a trading lesson. They'll take a tennis lesson. They'll take a cooking class. They'll learn to crochet in their spare time. But when it comes to their own money in the most competitive market in the world, they think that training is not necessary. Thank God, because they feed us. The people that naive, that's where our money comes from. So thank God they believe that. Thank God the world does not believe, the vast majority of the world does not believe you need proper training. They believe you need proper training in photography. They believe that proper training is necessary to drive a car. But when it comes to the most competitive market in the world, that is played by some of the brightest minds, some of the most sophisticated algorithms, entities and people with billions of dollars behind them, they believe that with no training, they can walk into those shark-infested waters and win. Thank God for them. It means our future is secure. Do you understand? And as long as the vast majority of people are out there like that, we will have a constant flow of capital to take. Because think about this, guys. 92% of the people deposit, 8% of the people withdraw. But the withdrawals withdraw much bigger than your average depositor. So an average withdrawer, an average successful trader needs thousands of depositors to support him. It can't be equal. You can't have a market live very long or exist very long if 50% withdraw and 50% deposit, because when you get good, you withdraw big. You withdraw bigger than your average depositor. Let me give you a statistic. The average losing trader has 7 deposits in his life. The average losing trader will deposit 7 times. So we as professionals, 7 deposits from this guy before we need another one to replace him. So the message is, come on in, you don't need education. You can just open up an account in 10 minutes. And no, you don't need adequate capital. Open up an account with $3,000. Pit your $3,000 against my 5 million or whatever. And oh yes, think that you can win. We know you can't, but just bring your 3,000, bring your 5,000 to the game. We know that if we allow you to deposit 3,000 or 5,000 at a time, that you'll do it 7 times. But if we raise the requirement, you'll do it 1 time. So it is better, the message, come on into this game. You don't need training, you don't need proper education, and you don't need the proper amount of capital to do this correctly. Because with that formula, we get more money from you deposited than any other formula. The game is tested. 7 deposits of $3,000 to $5,000 is the average life of a losing trader. And you and I should want it all. We should want all of those deposits. That is where your pay comes from. Your pay comes from the depositors who bring their uneducated ideas to this game with inappropriate capital. You can't win at this game with $3,000. And if someone is teaching you that, they're lying or they're stupid too. It's the age-old story that has been told to poor people throughout their entire lives, hundreds of years. You don't need a lot of money to win. How ridiculous. You can buy a house with no money down. How long did that last? You don't need money. You don't need a lot of money. Just come in with your little change. Why is that the message? Because you'll deposit more. It's easier to deposit another 3,000 if they keep the requirement small, but you can't play this game adequately with $3,000. You can't expect to come into my house and take food from me with $3,000. That's not going to happen. I don't know about any other planet. I just know about this planet. And on this planet we call planet Earth, it takes money to make money. And that law has existed from the beginning of time. It will never change. If you think you can do this with little money, you're just going to be a depositor 7 times and be gone. You can't. I start each trader off with 50,000, and that's little. I need you working toward level 4. You're at the baby stage at 50,000. That's just you warming up. You need to be adequately capitalized. The number one reason most businesses go out of business is for lack of capital, lack of the proper amount of capital. Trading is no different from any business. Most people are losing. Some person said, why does 92% of the people fail? Uneducated and undercapitalized. Boom, there it is, 92% right there. And then if you add the fact that most people never reach a place of becoming self-disciplined at anything. Add lack of self-discipline to the game. So then you say, I'm not trained or educated by someone who knows more than me, number one. I'm not educated or trained. I am undercapitalized and I'm not disciplined. How it's just impossible. How many people can actually do what they say they're going to do? How many people can actually say, you know what, Oliver said, don't fight the rising 20, don't fight the blue line. How many people can actually do it, even though they know it? Very few. How many people can stop their trading before they reach the $300 maximum I impose? Very few. You know what? They'll just keep going. This game doesn't have a 92% failure rate because it's just impossible. It has a 92% failure rate because of the way the vast majority of participants approach it. Do you think that you can read stuff off the internet and then compete against me? Really? You think you can read an article off the internet or join a Facebook group and become a good trader? Really? Do you think it's that simple? Do you think you can read a book and become a good trader? Do you think you can listen to a lecture and become a good trader? Read a magazine article and become a good trader? Do you really think that? You'll always deposit. You think you can watch a video and become a good trader? Really? If it were that simple, then all the librarians in the world would be your master traders, wouldn't they? All the master readers, all the great studiers, they would be the traders. They would be the big money makers. You can't study your way to this. You can't read something and become good. Try that with golf. Try reading a golf book and think that you're a pro after you've read a golf book. Try becoming a master carpenter by reading a book or sitting down listening to a lecture, even this one. It takes mentorship. It takes daily guidance every trading day of your life. It takes constant correction, tweaking, improvement. You don't become Michael Jordan by reading a book. You become Michael Jordan by playing the game almost every day of your life, with others watching and helping you correct and filming you and pointing things out. This is no different from anything else. How does your kid become a great high school basketball player? He started bouncing the ball at 3 years old. But you think you can watch a YouTube video and then become a great trader. or buy a book off Amazon. It's crazy. With your own family's money, you are that naive. It's crazy to me. You've got to put work into this. It's no different from anything else. You can't study your way to it. It doesn't work that way. You've got to trade your way to mastery. And trading under the guidance of someone who is watching you, helping correct you, pointing out you made this little error here. Let's correct that. That's how in anything you become better. And the odds are still hard, but they're impossible without that. I will never tell you that this is easy. It's not. And thank God it's not. If it was easy, there wouldn't be a big payment for those who make it. I'm glad it's hard. I'm glad every single one of you is going to have a hard time, because I had the same hard time. I am glad 90% of the people here can't make it. I am glad it has a high failure rate. I thank the trading gods every morning that it's like that. Because the moment the depositors dry up because they get smarter is the moment our pay gets smaller. I'm not concerned with anybody else. I'm not concerned with anybody else who's not here. I'm concerned with my family and my family only. I'm concerned with my traders and my traders only. I'm not concerned with anybody else who's not part of my trading team. I'm not concerned with what you do with your capital, what you do with how you trade or whatever. I'm only concerned with you. I'm only concerned with my family. I'm only concerned with my traders. And they know I spend virtually every waking moment of my professional life working on ways to make them better, make them sharper, make them head and shoulders above the rest, to help them move from being a depositor to a withdrawer. And you can get to a place where you never make a deposit ever again. Is it hard? Yes. Will you have to put some work into it? Absolutely. Will you need some training and guidance every single day of your trading life? You will. But it's possible. It's not impossible. Glenn says a lot of guys don't want to be professional traders. Well, but why is that? Like, why would you not want to do something professionally? I mean, when I say professional trader, I'm not saying working for someone, because this business is about not working for someone. This business is about firing your boss, no? I'm just saying doing it professionally and not doing it like a freaking idiot. I'm not saying professional by now seeking a trading job on a desk on Wall Street by Goldman Sachs or something. I don't mean the term like that. I just mean doing it at the best way you can do it, the professional way. You understand? You know, so that's all I'm saying. If you're going to do something, just do it the best and seek out the best. That's what I say. Do it the best. To do it the best, you seek out the best. Take a look at this slide, guys. Can you see your big bar opportunities? Do you notice where your initial this is the first bar of the morning. Boom. Where is your first protection? Boom. Where is your next protection if you don't add? Boom. Where's your next one? Here, because it's the opposite color that has 2 red bars later. Now you can move to the opposite color stop, which is green. So it's opposite, it's big bar, opposite color. All right? Opposite color, big bar, big bar. This game does not have to be complex. Big bar rips through the opposite color. Protection. Protection adjustment. Protection adjustment, big bar. Notice how your stock comes to, gets away, comes back, gets away, comes back. You've got to take your profits on these away movements. Away, come back. Away, come back. You're trading in the direction of the 20-period moving average. You're not like a freaking idiot trying to fight the power, fight the powers that be. Oh, I'm going to go long. I'm going to go long. I want to try to go long. I think it's oversold. You trade with this, not against it. A lot of you are asking me the same question over and over again. Is this 2 minute? Is this daily? Is this? It doesn't matter. I started off this talk telling you that every tactic is applicable to every time frame. This happens to be a 2-minute chart, I believe, but no, this is a daily chart. But it doesn't matter the time frame. I'm showing you different time frames just to show you the universality of the play, of the strategy. You trade with the direction. Look, if this is the first bar of the day, where is your entry? You're trading, which bar could you enter? You're trading when red eliminates the opposite color. Boom, when red eliminates the opposite color. You're trading in the downward direction. So when does red eliminate the green? Protection. Then when can you add on big bars or violet bars eliminating? Boom. When do you take profits away from the blue line? Taking profits is an art form. But anywhere down here, taking profits is fine because you are away. Once this starts rising, you stop focusing on red. I know we're under, but still, the main guide is the direction of your 20-period moving average. Stay with this flow and you will stay out of trouble most of the time. Do you see fat green eliminating the opposite color? Do you see where your first protection is? Boom. Do you see where your next protection is? Boom. and your next one. Boom. And the opposite color protection. After red, after 2 green bars that follow red, you can use red. Here's another red, 2 green bars after red, you can now use the red. Then the big bar, then the red. You have walked this play from this bar all the way to here. That takes mastery. Do you understand that a novice doesn't know how to do that? In just an hour and a half or so, look at where you are, taking profits away, moving stops up to appropriate points, trading with the 20-period moving average, not against it, diving into fat bars that rip through the opposite color. In a short period of time, you know more than 95% of the people out there. You have more of a method today than most people sloshing around in the markets like freaking idiots in this short period of time. Imagine if I had you for life, every day that you decide to trade. Imagine if I had you for a year. If it's this in an hour and a half, imagine if I had you for a month. Where would you be? You're head and shoulders above most people now. Do you understand? Andrea's asking, is there some time that you don't do anything? Yes. I would say that there are certain times a day, like for instance, the middle of the trading day is the most difficult time for people. So I tell traders, trade the bookends, trade the first 90 minutes and or trade the last 90 minutes. Leave the middle of the day for lunch or leave it alone. Oh, Carolina, thank you so much. Carolina is saying, I feel so grateful with you for being amazing. Thank you. I really appreciate that. Guys, listen. I've shared just one simple thing really with you. There are 14 things I'd love for you to know. 14 things. All right? 14 things to take into the market every day you decide to trade responsibly, knowing how to protect yourself, knowing how to walk your trade, knowing when it's time to take profits off the table, knowing when it's time to do nothing, knowing which plays you play heavy, which plays you play light. I want to give you that understanding, that knowledge. And then I want to give you capital to do it with, just so that you're not risking yours. And I want